Hello everyone, welcome back. I got a lot of really good ones for you today. Sun's going down, so we're gonna kind of make this a quick one. Maybe by the time the sun goes down, we're done. Want to get right into it, not waste any of your time. Been about a week since I've done a video, but hey, let's get you caught up, kind of discuss things we talked about in the past, kind of where we're at and where we're potentially going. Markets. 3 major stock indices today moved up nicely. What you're seeing is the 10-year yield in the bond market sub 3. It's at 2.9% right now. We talked about in previous videos how we wanted to see that 10-year yield drop below 3%. It has, and that would send risk assets higher. So oil, gold, Nasdaq, Bitcoin, fine art, risk assets, things that aren't, bonds and really conservative investments. So as that 10-year yield dips below 3%, presumably the Fed buying bonds driving those yields down, because remember, as people buy bonds and the bond bubble gets larger, that drives yields down. Who's the buyer here? Presumably the Fed. I don't know any private institution or individual that would be wanting to buy 10-year bonds with yields where they're at right now. So presumably this is the Fed buying bonds, driving those yields down, stabilizing the debt market, kind of pushing downward pressure on the dollar and interest rates. And hey, that allows risk assets to go up, to include real estate. Mortgage rates are probably falling with these falling bond yields and interest rates, right? So as mortgage rates move lower, more potential people qualify to buy. That sends house tag prices, like the price tag, higher. So as the mortgage rates on average go lower, house price tags go higher, hurting the middle class, right? All this inflation we've talked about, but you're seeing the markets not buying into the Fed's theory that they're going to get really hawkish, have all these interest rate hikes, be super aggressive with all this talk right now of recession. Like 75% of survey respondents say we're headed for a recession. Look, if the numbers are that bad and sentiment is that bad, you're probably already in a recession. The most of the damage is, I could totally be wrong, but most of the damage is presumably done already. So risk assets have been beaten up the first 6 months of this year, but now that the Fed is going to front load some of these more aggressive rate hikes going into the end of the summer, I would expect a 75 to 100 basis point hike at Fed Day on July 27th. Once we get through that, I would anticipate the Fed saying, we were saying we're going to do 12 or 13 rate hikes going forward. Let's bring that number down to 9. And I think that's going to send risk assets higher. So Bitcoin, we've talked about in recent videos at 20, now 23. That's a good sign, but hey, we'll see if it holds, and we can only deal in probabilities and nobody knows what's going to happen. But we've also seen the Nasdaq move above 12,000. If you go back to my 74 recession Kramer video, inverse Kramer video, it's 74 recession inverse Kramer, something like that, about a month ago. I talked about how Kramer was saying to sell those tech stocks at Nasdaq 11,500. Nasdaq's now over 12,000. I pitched to you that inverse Kramer play, but hey, it could have gone either way, right? You never really know. So I don't really want to take too much credit for some of these calls, because I don't want to take responsibility when they go down. It's all probabilities and nobody knows what's going to happen. But we talked about yields moving down, rates moving down, the Fed lying about being so hawkish and raising these things, and that's killing the dollar, allowing risk assets to go higher. Who's buying those 10-year bonds, driving those yields down? Presumably the Federal Reserve. So they're bringing stability to the debt markets. They're bringing those dollars and rates down. It's going to make inflation worse, but it sends risk assets higher, if that makes sense. So Blackrock's talking a lot about food shortages. I'm not worried about people in the U.S. starving necessarily. I'm not worried about people in the 50 states, but I am worried about people in developing economies and anybody that's living close to abject poverty in 2019. Well, their situation got about 40% harder. So, I really hope the best for those people, and I really hope we can keep the world fed, but I'm not panicking like some Americans are, being an American. But hey, anything can happen. We do grow a lot of food though, okay? But I'm more worried about other people. It's scary though. Inflation, BlackRock saying not to get too concerned about inflation. Usually BlackRock, they actually, like, a lot of banks will actually lie to you. Like, Citigroup's wrong every time. And I'm not sure if it's because they try to keep you off balance or because they really suck and everyone's just like, we're just going to use you as the proxy for the one that's always wrong. But anyway, some of these banks have better track records than others, and the reason they give you a buy or sell recommendation also could be because they don't know any better, or because they are really bluffing and lying to you. So you can never really figure that out. But anyway, BlackRock is saying don't worry about inflation, and Larry Fink. But honestly, I think that we actually should be worried about inflation. Normally, when BlackRock tells me to worry or don't worry, they're actually right. But this time, I'm a little more worried about inflation than Larry Fink is. Just my thoughts, but I follow BlackRock very closely. Larry Fink, kind of the president of the shadow government of the United States, 12 trillion in assets under management, works very closely with Janet Yellen and Jerome Powell, I'm sure, and the CEO of Vanguard, right? Look those people up. It's insane how much power they have and how long they've been around. So, yeah, I'm still tentatively bullish. Nasdaq, so the tech stocks, the high growth stocks that don't pay a dividend. Gold, Bitcoin, oil, but I could totally be wrong, and I'm super bearish the dollar camp. I'm not that big dollar bull that's like save cash for the crash. Like, I don't think the markets are crashing. I think the dollar is crashing, and the middle class is kind of going away, but that doesn't look like stock crashes. The stocks crash up in that scenario, and that's kind of what I'm leaning more towards. Fed's been letting air out of the tires with these hawkish rhetoric this last 6 months, but I think they're going to reverse because they will induce a recession if they keep raising interest rates. They know this. They don't want to do this. They're the beast system. They exist to protect the beast. So, I mean, if you just follow that train of logic and what these institutions are all about doing to people, you'll find that, if anything, risk assets are probably going to inflate as a function of the dollar and the middle class and the working class just being completely decimated. So just my thoughts on that. So yeah, I'm bullish risk assets, but for all the wrong reasons, I guess you could say. But we've talked about that in a lot of these videos. Not really much else I got for you. I'm sure I'm missing something. Let me think. About it. We talked about food, talked about all asset classes. Yeah, just kind of watch that 10-year yield. If it goes up, that scares risk assets. If it goes down or stays stable, I think that's good for risk assets. Expect Fed Day on the 27th, 75 basis point, 100 basis point hike. Then expect them to take interest rate hikes going off the table going forward. That's just my opinion. Expect inflation to stick around. Expect for some of these supply chain issues to persist. But I wouldn't expect much deflation in asset prices. I expect assets to continue to inflate. In 1974, there was a brief recession, but overall that decade was extremely inflationary. And so I'm tentatively bullish those risk assets, but again, we're gonna have to see. Other than that, I'll be back if anything crazy happens, and yeah, we'll just keep going. Hope this video finds you doing well. Hope you've had an awesome week, and till next time.